Hey guys, it's Matt from Anti Hedge, here once again to bring you another educational video. Before we begin, I just gotta say this is not financial advice. We do not accept liabilities for losses that you might incur, and all these videos are here for research, news, educational purposes. It's important you stay till the end of this video so you could wrap your head around what I'm about to say and where I'm about to break down, I guess, the LUKSO graph. So today is going to be the first time where I break down a technical analysis for you guys. So usually the people in my Telegram channels are the only ones that are getting this information, but today I decided to break this one down for you. So right here, you're basically seeing that this is how I drew out basically the analysis. So first thing I did was I drew a line of the tops, the two tops that we see here, because as we can see, we're forming almost like a little cup. So I draw the tops. These are resistance lines. This is where the price is basically like hitting, but not really able to pass it. Not enough momentum. And right here, I draw the bottom. So this is the lowest point where we hit. And as you can see right here, it runs parallel to the top line. And the reason I draw it there is there's a reason for it. As you see here, we hit a top, and then we had patterns where the lows were getting lower and the highs were getting lower, right? Now, as you can see, it's been consistently there, and then bang, right here, we hit the bottom, bang. And when we hit here, we did not close lower. So right there, technically, that's the beginning of us bottoming out. We did not go lower than here. And then right here, this is the beginning of the change of the trend. So this is when the highs are getting higher and the lows are getting higher. So this is the exact opposite of what we had saw. And that's why I mapped this out as the support line and this one as the resistance line naturally. Now, this is where it's going to get, I guess, like where I'm going to break it down to be a little bit more technical. So I've mentioned it on other graphs that a lot of these things move symmetrically in triangles most of the time. So here's where it more or less breaks down. This top line here and the bottom line here is basically the trajectory zone, right? So this is where the trajectory of where LUKSO is going to bounce within based off of the lows and the highs. So as you can see here, high, we go high, and then we go high. So we've relatively respected the trend so far, the greater trend up to this point, as well as the lows. We go bounce, and we bounce, and we haven't bounced yet. So this is where it gets interesting, because where I've drawn these arrows here is where we're at in this, basically how we're going to play out. Now, a lot of people will be like, oh, why do you have 3 scenarios here? And it's like, well, I'm about to tell you, because we're mapping the entire chart out. Because realistically, technical analysis is as good as you are as a trader, right? At the end of the day, it's going to be based off of gut instincts, right? So most people they'll only give you one scenario of how it's going to break down, but at the end of the day, it's like you don't really know how it's going to break down, no matter how good your analysis is or whatever your technicals are. At the end of the day, there could be multiple ways it goes depending on bull traps, bear traps, this, that. Like, it's not easy, especially in something with a 15 million circulating supply at the moment and such a low price. So that really does affect volatility. So scenario 1 is the easiest. We follow basically the trend / trajectory line, and we stay within these margins, and we just fly right up to the 40 range within possibly a month or two. You know, so that would be roughly where we would land within a month or two. And that's roughly about when Q4 mainnet is launching. So that would, in theory, make sense because of accumulation. Now, that's the first scenario. Very simple. In this scenario, what you do is you just dollar cost average all the way up and wait for a dip. That's how you handle scenario 1. That's what most people are probably expecting. Now, scenario 2, which would make a lot of sense right here, is a teacup and handle, right? So you see here, we have the bottom, we have the cup, and then if we pull back, because that's usually what will happen around these times, it might pull back to maybe I would say between the $16 and the $18 range, but more likely 18. That's what I'm thinking. And after that pullback, people would load up one last time, and bang, we would be basically retesting the resistance line from that point. You know, it's not often that we won't break it after we make the handle, because that's basically the pullback, like a bow and arrow, and whew, the arrow flies. Now, I'm even going to draw it out for you one time here, just so you can see, like, look, 1, whoop, 2. It's like a little teacup. So it's super simple. And a lot of the times, like I try to take my trades based off of, like, really obvious patterns. Because if you're spending too much time debating what you're looking at, what kind of pattern you're looking at, chances are it's not worth taking the trade. Because if it's unclear, you won't necessarily get it right. Now, that's scenario 2, which is very likely as well, because a lot of the time before we have those big movements, you want to see a pullback, because the pullback is where people are going to load up. Now, that's scenario 2. What you would do in that scenario is the second you see it hit into the $18, $16 range, you would start loading up. At least load up a good portion. Whatever you would say, okay, this is worth it. Now, this is scenario 3. Scenario 3 is, I don't want to say the ideal, but it kind of is the ideal. It's the scenario that I wouldn't mind seeing play out, is if the whole market does another little, pullback. This is in the scenario where Bitcoin pulls back as well, by the way. So if Bitcoin and Ethereum pull back, that would bring us into a double bottom territory. And a double bottom territory is what you want to see when you're doing any trade, because when you're seeing that big double bottom, you know that there's going to be a huge accumulation. People are going to be basically buying whatever the sellers are willing to sell. They're going to load up as cheap as possible, and they are going to push that shit to new all-time highs very quickly, especially with a small supply. So seeing a double bottom here, that would be like a blessing in disguise. Most people would panic, they wouldn't want to see it, but the reality is if we actually do see this play out, like 1 and then 2, even if we hit the $7.50 range and then rebounded right back up to 28, that's still pretty close to 4x, and that would be just if you respected basically 3x. We'll say 3x and change. And that's just if you respect the last resistance line. Not even if we break past all-time highs. So that's why it's important for you guys to look at multiple scenarios of how it could break down. Because arguably all of these are possible, in my opinion, personally. So how I would play this chart, considering that there's about 3 scenarios, is A, you hold. Because if it's scenario 1, you don't want to be selling and taking profits early. You're going to lose. Second scenario is if it pulls back, that would be when you just load up a nice little extra bag. That's the ideal. That would be a nice little thing, and then, all right, bang, off to new all-time highs we go. That's pretty simple as well. But the more complicated scenario is, how do we tell if the pullback is going to be a handle or a double bottom? And that's where people could be like, okay, maybe I should sell. But that's where we're going to zoom in here. We're going to zoom in here. And I'm basically just going to show you right here at $16. And it's funny because it's pretty symmetrical how it ends up lined up. But at $16, that's more or less where you're going to have your final support to see if it's going to be a teacup or a double bottom. If we break through and we start seeing prices like $15.50, $15, there's a solid chance that we could slide back to here. I would say set your stop losses even at $14.50 in case it's to pull people out and rip their LUKSO out of their hand expecting a double bottom. So like that's my scenario. It's like, this is the zone that you need to watch. Between $17, let's say, and 15. That little zone right here that I'm basically about to just highlight for you guys right here, that's where you're going to make your decision. Split decision, all done by gut instinct, because that's the only way that you should be making a trade, in my opinion. Oh, off of technicals and gut instinct. And then if you see that happens and we break through that, you're going to see that double bottom form. People are going to panic. That's when you decide, that's for me personally, in my opinion. If we see that double bottom and we see a $4 or $5 LUKSO again, I will load that shit up like crazy. I can't say the same for you guys, because that's your own opinion, your own trade. I'm not telling you what to do here. I'm just showing you how I would play every single scenario. And I'm going to repeat it one more time fast. The first scenario, you hold. The second scenario, you load up a small bag in case it drops lower to the third scenario, where you're going to want to have your available capital to load up that dip if it comes again. So that's how I would play this LUKSO dip, or this LUKSO graph, based off of what happens here. So I've given you three scenarios, all relatively detailed on how you could play this entire thing. You could also follow the Bollinger Bands, which is interesting. And one more thing that I want to mention, it's a technical indicator, and basically it's just like RSI, which just shows you like the relative strength index, like the like how much basically buyers are interested, if it's overbought or oversold. Now here's what's interesting is I used the RSI index with the MFI, which is money flow index, so I could confirm a trend. Now this is something I'll try to get into deeper when I have a better understanding to be able to explain it better. And basically, like, this in a nutshell would be that one is telling you if it's overbought or oversold based off of where it is in the index. If it's over here, it's overbought. If it's over here, it's oversold. But the money to flow index is something that's extremely important, because it's going to confirm a trend. So it's like, if you were to see the money flow index going down, that would mean that 100% people are selling and they are exiting their positions. But the thing that's interesting is the money flow index is up at the ceiling and the RSI is low, which means that technically it is being oversold, but the volume is showing us that it's also being overbought, because the money flowing into it shows us that people are buying it as a dip. And that's how I use these two in successions with each other to basically make a decision off the RSI, because otherwise the RSI could just be up, down, this, that. But I like to look at the money flow index with the RSI, and then MACD, movement average, convergence, divergence. It just tells you the moving averages and if things are favorable for you. And then volume. Those are the four things I trade around. Volume, you want to see that, and as you can see here, where the money flow index was going high, look, bang, high volume, even though technically it was being oversold. So that's more or less that. I guess one last thing too is like the Bollinger Bands here. I keep them just to keep an idea of if we're on the higher or the lower end. Bollinger Bands just give you a range of volatility that you could potentially profit on if you're trading within. But like, they're hit or miss. You don't take trades just based solely off of Bollinger Bands. And ideally you try to have technical indicators that work together as opposed to ones that work against each other. And it happens where they'll put too many indicators on a graph and they'll just confuse themselves. They won't even know what's happening. So really just focus on setting up your indicators to work together, and then try to play certain trends that those indicators are good at identifying. Like, that's really what it is. There's so many strategies for trading and using technical analysis to trade that I'm not going to sit here and tell you one is better than the other. You're going to develop your own style, and you're going to basically do what you have to do based on your own intuition as well as your own intelligence. But this is just me showing you how I take a trade, and I just try to take the most obvious ones. That's how I keep my win rate high, and that's how I keep myself from getting wrecked. So that's me giving that to you guys. I hope you enjoyed this technical analysis video. If you stayed till the end, thank you so much. Like, comment, and subscribe. Definitely check out future ones to come. And take care.